Welcome to the PAI Morning Briefing. I'm your host from Pantheon AI, and today is March 31st, 2025. Good morning, everyone. I hope you're ready to dive into a day packed with market insights, trending news, and plenty of food for thought. Grab your coffee and get comfortable as we explore the ups and downs of global markets, the latest corporate maneuvers, and a few humorous twists along the way.
Let's start with our market overview. The current state of our major indices is creating a cautious atmosphere this morning. The S&P 500 is trading at approximately 5,520.4, down by about negative 0.13% compared to yesterday's close. Turning to the Dow Jones, it's hovering around 41,268.4, having slid about negative 0.27%. The Nasdaq is slightly softer as well, trading at roughly 17,029.9 with a drop of about negative 0.91%. It looks like investors are treading carefully today, possibly eyeing the global economic tensions and the tariff chatter from Washington.
Now, if you're a crypto enthusiast, you'll notice Bitcoin is trading at around 82,532.56, enjoying a small gain of 0.21%, and Ethereum is up at approximately 1,824.24, climbing by nearly 0.97%. It seems that while traditional indexes are feeling the weight of macroeconomic uncertainty, our digital assets are holding their own and even enjoying a modest uptick. Perhaps it's a case of when the going gets tough, the crypto hodlers keep smiling.
Speaking of market tensions, let's dive deeper into the major market trends emerging today. One of the standout narratives is the anticipation of a sharply lower opening on U.S. major indices, with a notable mention of a Liberation Day coming up on April 2nd, where President Trump's administration has signaled a retaliatory move by threatening tariffs across the board. Investors have been on edge. The rhetoric suggests that tariffs could hit essentially all trading partners, and this broad-brush policy is expected to slow down global economic growth and dampen earnings expectations across multiple sectors. Now, while this kind of geopolitical brinkmanship might sound like something out of a thriller novel, it's very real for those managing large portfolios and trading day-to-day positions. As always, the emphasis remains on how long these tariffs will persist and what precise countermeasures will be implemented by those affected.
This tension has translated into a more cautious sentiment across traditional market sectors. In fact, many investors are revisiting their risk appetites and weighing the merits of defensive stocks versus cyclical picks. The slight drop we're seeing in the S&P 500 and Dow Jones is reflective of this uncertainty. Were it not for the modest gains in the cryptocurrency markets, one might have thought that all sectors were united in apprehension. But then again, isn't it fascinating how digital assets sometimes march to the beat of their own drum? It raises the question, are we witnessing the gradual evolution of asset class separation, where cryptocurrencies act as a counterbalance during times of traditional market stress?
Now let's talk about some of the major news stories that are adding spice to this already vibrant market narrative. First up, brace yourselves for some potentially disruptive news. Reports are circulating that U.S. major indices are expected to open sharply lower in response to the impending Liberation Day events. The idea is that tariffs, potentially sweeping tariffs that target multiple nations, will soon disrupt the normal flow of trade and earnings. It's almost like watching a domino effect in slow motion. Investors are asking, how will this policy move ultimately reshape our global trade relationships? Will it trigger a proactive response from foreign governments, or should we brace ourselves for a prolonged period of volatility? These are questions that no one can answer with absolute certainty, but they're at the forefront of many boardrooms and trading desks.
Adding to the market's intensity is another headline featuring Elon Musk. In a surprising twist, Musk recently stated that those criticizing his approach to doji cuts appear to be trying to pressure Tesla into abandoning its aggressive strategies. Now, this one certainly caught the attention of market watchers, with Tesla shares having experienced a year-to-date decline of more than 34% and being nearly halved from its December peak. It's clear that investors are jaded by the volatility. Musk's personal brand and his unconventional approach have always been a double-edged sword in the market. On one hand, his innovations and bold statements can drive remarkable gains. On the other, his tweets and decisions can send shockwaves of uncertainty through portfolios. It makes you wonder if, in today's digital era, the person in the driver's seat is as important as the vehicle itself.
In the midst of all this, there is also some major corporate M&A activity that signals significant strategic shifts. AMD has officially completed its acquisition of ZT Systems. This move is particularly noteworthy for those eyeing the data center AI accelerator opportunity projected for 2028, a market expected to be valued at a mind-boggling $500 billion. By integrating ZT Systems' industry-leading systems and rack-level expertise with AMD's advanced GPU, CPU, and networking silicon, the company is positioning itself at the front of the AI explosion. This acquisition suggests that AMD is betting heavily on the future, and it underscores the growing importance of AI in shaping the technological landscape. It's a reminder that sometimes the boldest moves are not just about expanding market share today, but about laying down the architecture for tomorrow's innovations.
In another notable M&A event, LPL Financial has made headlines with its definitive purchase agreement to acquire Commonwealth Financial Network. Valued at approximately $2.7 billion, this deal represents a strategic consolidation in the financial services space, where scale and connectivity are increasingly key. It's a fascinating development, as LPL Financial is known for its strong advisory network combined with cutting-edge fintech solutions. By joining forces with Commonwealth Financial Network, we might very well see an enhanced ability to provide robust, integrated financial solutions to a broader client base. Moreover, this acquisition could help buffer the impact of shorter-term market fluctuations, especially counting the current headwinds posed by tariff-induced uncertainty.
And speaking of bold moves, M&A news continues with an intriguing snapshot. Rocket Companies is set to buy Mr. Cooper in an all-stock deal valued at approximately $9.4 billion in equity. This move equips Rocket with a significant hold in the mortgage sector, a market that has seen a roller coaster ride of interest rate adjustments, regulatory changes, and evolving consumer behaviors over the last few years. It's a strategic play aimed at consolidating market share in an environment where scale is rapidly becoming synonymous with stability. With this acquisition, Rocket extends its footprint, and the all-stock nature of the deal could signal confidence in long-term market resilience despite the current turbulence.
Not to be outdone, Seagate Technology has also been busy stating its strategic maneuvers by completing its acquisition of Intevac. This move is set to consolidate Seagate's leadership in mass-capacity data storage, as Intevac specializes in thin-film processing systems. While this deal might not send the same immediate shockwaves as a headline stock rally or a tariff-induced sell-off, it represents an important piece of the broader market puzzle. As data consumption and storage needs continue to soar in an increasingly digital world, companies like Seagate are ensuring they remain ahead of the technological curve. It's one of those deals that might not grab your attention in a single headline, but its implications will likely resonate in boardrooms and tech labs for years to come.
Now, if you're keeping track of our conversation, you might have noticed that several stories involve acquisition announcements and strategic partnerships. In today's market, this is more than just corporate restructuring. It's a signal of adaptation in the face of shifting external pressures. Companies are aligning themselves not just for today's challenges, but for the anticipated global economic landscape that includes volatile trade relations, the rapid influx of technological advancements, and changing consumer habits. It certainly makes you feel like you're watching a grand chess match where every move is set to recalibrate future strategies.
Aside from these headline stories, we've also seen some intriguing human stories resonating within the corporate world. The Shake Shack founder recently made waves with a piece of unconventional wisdom about hiring practices. He emphatically stated that the best employees share 6 emotional skills, famously noting, "I don't give a damn what your IQ is when it comes to certain jobs." It's a refreshing reminder that in today's corporate environment, emotional intelligence and soft skills can be just as critical as technical prowess. It raises an interesting question for employers and job seekers alike. In a world where automation and data analytics are overshadowing traditional qualifications, how can we better value the human elements that spur creativity and leadership?
In a similar vein, there's been intriguing coverage on how introverted individuals might be uniquely positioned to excel in both work and life. Drawn on insights from communication experts like Lorraine K. Lee, recent studies highlight that introverts possess what many would call superpowers. They tend to have incredibly sharp listening skills, the ability to think deeply, and a natural inclination towards thoughtful problem solving. It appears that the qualities that are often overlooked in today's extrovert-celebrating culture might just be the secret weapons in tomorrow's workplace. It's a thought-provoking notion. What if the quiet thinkers around the office are the ones actually driving forward innovation, even if they're not the loudest in the room?
As we transition into our detailed sector analysis, let's zoom in on a few key areas that are seeing significant developments today: technology, energy, and finance. On the technology front, AMD's acquisition of ZT Systems is a beacon of optimism. While the overall market may be experiencing headwinds due to trade uncertainties, the technology sector continues to charge ahead, boldly embracing the opportunities that artificial intelligence presents. Many analysts believe that we're on the cusp of what could be a truly transformative period where the integration of AI into everyday business operations might revolutionize everything from data centers to consumer devices. This strategic acquisition is a clear signal from AMD. They are not merely content to follow trends, but are instead planning to set them. And if you ask me, it's a smart move given the expected exponential growth in the AI accelerator market by 2028.
Turning our attention to the energy sector, the landscape has been equally dynamic, but with its own unique challenges. Global tensions and shifting trade policies have led to fluctuations in energy prices, and while we haven't seen any major headline-grabbing deals in this space today, the indirect effects of tariffs and geopolitical uncertainties are being felt here too. The energy market always seems to play second fiddle to some of the more headline-grabbing tech and financial news, yet it remains the backbone of every economic engine. With the potential for these tariff policies to reshape import and export dynamics, it will be fascinating to observe how energy companies adjust their strategies in the coming months. Investors might want to keep a close watch on how these policy adjustments impact supply chains, especially in critical regions where energy production is highly interdependent.
In the finance sector, the consolidation trend is more evident than ever, with both LPL Financial's acquisition of Commonwealth Financial Network and Rocket Company's takeover of Mr. Cooper making headlines. These moves are symptomatic of larger patterns where increased regulation, technology integration, and evolving consumer demands are pushing financial institutions to rethink their business models. By expanding their networks and capabilities, firms are essentially preparing themselves for a future where agility and adaptability will define market success. The financial world has always been one of reinvention, and what we're witnessing today is a renewed commitment to robust foundational change that can weather both market disruptions and technological advances.
Of course, no discussion of today's market landscape would be complete without considering the global market implications. It's clear that the tone set by U.S. policy actions, especially concerning tariffs, will have ripple effects far beyond American borders. European markets, Asian economies, and emerging markets are all gearing up for potential slowdowns as lower global earnings and trade challenges set in. This interconnectedness means that while U.S. charts are showing modest declines, we might see more pronounced volatility in other regions. Investors who have diversified internationally will need to pay extra attention to these cross-border dynamics. And it makes you wonder, how will the world react if these tariff measures end up triggering a broader reassessment of trade practices across multiple continents? The answers aren't straightforward, but they certainly provide ample fodder for speculation and analysis.
Now let's shift gears and share some expert insights and predictions. In today's environment, many seasoned analysts are cautious by nature yet optimistic about long-term trends. The current market volatility, in part driven by potential tariff escalations, is likely to serve as a temporary headwind rather than a sign of structural weakness. In other words, while today's data shows slight declines in the S&P 500, Dow Jones, and Nasdaq, this is, by many accounts, a brief correction, a pause, before the market resumes its upward march once the dust settles. Some experts are even suggesting that these correction periods could be prime moments for savvy investors to pick up quality stocks at a relative discount.
Furthermore, the resilience displayed by Bitcoin and Ethereum amid these uncertainties offers an interesting perspective on market sentiment. It begs the question, could digital assets someday serve as a hedge against traditional market stresses induced by policy changes? While it's too early to draw definitive conclusions, the incremental gains in these cryptocurrencies remind us that diversification isn't just a buzzword. It's a crucial strategy in these turbulent times.
As we consider all these developments, I can't help but share a lighthearted observation. It seems almost as if the stock market is a living organism that occasionally sneezes when it gets a bit of a cold. And much like us, a little sneeze, although annoying, doesn't necessarily mean the end of the day. Sometimes a well-timed sneeze, or in our case, a minor correction, simply clears the air for what comes next.
Before we wrap up, let's revisit some of the key highlights we've covered today. We began with an overview of traditional markets where the S&P 500, Dow Jones, and Nasdaq have shown modest declines in response to looming geopolitical challenges. We then touched on the resilience of Bitcoin and Ethereum, which has managed to post modest gains. On the news front, we discussed the anticipated sharply lower U.S. market open amid tariff threats linked to the upcoming Liberation Day, Elon Musk's controversy over his approach to doji cuts and its potential implications for Tesla, and several major M&A activities, including AMD's acquisition of ZT Systems, LPL Financial's consolidation move, Rocket Company's strategic acquisition of Mr. Cooper, and Seagate's deal with Intevac. Additionally, we explored some fascinating commentary on organizational culture from the Shake Shack founder and insights about introverted leadership skills.
For those wondering what sectors might offer opportunities for mitigating risk during these uncertain times, our detailed sector analysis emphasized that while the technology sector is forging ahead with transformative deals and a clear eye on the AI future, the energy sector remains a critical barometer of global geopolitical and economic conditions. Meanwhile, the finance sector's consolidation trend indicates that long-term stability might well be built on the foundations of strategic mergers and acquisitions.
Now, as we approach the end of today's conversation, I'd like to pose a few thought-provoking questions for you, our engaged audience. With the ever-present shadows of protectionist trade policies and tariff escalations, what adjustments do you feel are most critical for global investors in terms of portfolio diversification? Is this environment a signal to lean more heavily on technology and digital assets, or should traditional value stocks remain a cornerstone of your strategy? And as mergers and acquisitions reshape the financial landscape, are you prepared to identify and seize the moment when market corrections present unexpected opportunities?
In this rapidly evolving economic environment, I encourage you all to keep your eyes open, remain agile, and always ask the questions that help you shape your investment strategy. Remember, at Pantheon AI, we are here as your information co-pilot, guiding you through the complexities of today's markets with expert insights and timely updates.
Before we sign off, let's have a bit of fun. Somewhere in the midst of all these high-stakes decisions, there's a chance to laugh. After all, if the market can surprise us with a sneeze now and then, maybe it's reminding us not to take everything too seriously. Not every drop in the index has to feel like the apocalypse, even if it does sometimes feel that way. So, take a deep breath and enjoy the ride, both the exhilarating highs and the instructive lows.
To recap, major indices are in correction mode this morning, influenced by looming tariff policies and global trade tensions. Despite this, technology companies, with their ambitious investments in AI and data centers, signal growth and resilience. In finance, strategic consolidations point toward a longer-term quest for stability amidst uncertainty. And while some might view the day's challenges as roadblocks, they can also serve as opportunities for those ready to learn and adapt, the very essence of what we at Pantheon AI stand for.
I want to thank each and every one of you for tuning in today. Feel free to reach out with your thoughts or even questions for our AI co-pilot. After all, having an inquisitive mind is the first step towards financial empowerment. Join us again tomorrow for another deep dive into the markets and the trends that shape our financial future. And remember, learning shouldn't feel like a full-time job.
Until next time, this is your host from Pantheon AI signing off, wishing you a smart, steady, and successful trading day ahead. Stay curious, stay invested, and never stop asking the right questions.